Hi friends, welcome to our journey on financial management. This is the first lecture. In the subsequent videos as well as in this video, my objective would be to give you a strong foundation, the core concept of each and every topics related to finance. Friends, our lecture today is Introduction to Financial Management. So friends, I will be very simple. I would like to break the entire matter into small points here. Now let's begin. You all know that finance is the lifeblood of an organization. Without finance, we cannot even imagine to start an unit, start an organization. We cannot run the organization. We cannot expand the organization. So to say that it's indeed impossible that an organization will come to its very existence without finance. So friends, since finance is so vital, and you all know that this is a finance, it's a resource for an organization, and this is limited. We cannot say that finance is unlimited, use it any manner you like, but whatever finance is available to an organization, it has a limitation, so it is scarce. So the purpose is that the organization should make use of this finance in the best possible manner, so that it gives you the maximum returns and there is no wastages. So friends, the financial management does that only. It tries to ensure that the funds are very efficiently managed. When I say efficient management of finance, what does this mean? Efficient management of finance means you are making the best possible use of this finance, given the fact that finance is scarce. This is a scarce resource available to an organization, and that's why we need to use it as efficiently as possible, so that we get maximum out of it and we avoid wastages. Okay friends, so finance is very vital, and that's why we are trying to know that how well we can manage this finance, right friends? Because how well we manage the finance will tell us how efficient is our management. Okay, so now it's also true that finance function, if it is strong, then the other activities will also not suffer, because it is ultimately finance department which will make the production department run. Okay, because procurement of goods, materials is possible when you have ready fund in the organization. Okay, it will also help other departments like personnel department, the salaries, the perquisites, the amenities you will get only when the finance department is strong enough. So friends, the having a very sound and a very efficient finance department in an organization is very basic. Now let's understand what are the functions of finance, or we can say what is financial management, or what is the scope of financial management. Okay, so we'll talk about the scope, and that will also tell you what is the functions of financial management. Okay, so let's see, we will have scope as long-term functions, or you can say long-term scope, and short-term. What I'm writing here is the scope, or I can say what are the functions of finance, or functions of financial management, you can say. So there is long-term scope and the short-term scope. You can say long-term functions and short-term functions. Now why I'm writing or listing it this way? Because we need money. Money is a narrow term, okay? Finance is a broader term. So you need fund for short-term operation of an organization as well as for the long-term operation of an organization. Let's understand what is short-term operation of an organization. So I think you all will agree that we need fund to finance our activities, day-to-day activities, right? We need to purchase raw materials, we need to settle our creditors, we need to pay for our conveyance, cartage, etc. So for the easy running of an organization, we need to have fund. So that means we want to ensure liquidity of an organization. Okay, we need to ensure the liquidity of an organization. Liquidity means what? That you have ready cash, or you have funds available. Okay, you have funds available to finance your day-to-day requirements. Okay friends, now under short-term financing, you are generally talking about the working capital management. Okay, you are talking about working capital management. Friends, in this video I'm just going to spell out the terms. We will study this in details. Okay, so we are talking about working capital management. So in working capital management, we are talking about cash management, we are talking about inventory management, and we are talking about receivables management. Okay, receivables management. So this management, these three items is required to be managed properly so that there is a proper synchronization of inflow of funds and outflow of funds. Fine, friends. So short-term decisions, financing decisions, you can also say what are the different decisions of finance: short-term decisions and long-term decisions. Okay, under short-term decisions we want to ensure liquidity in an organization, and this liquidity is maintained through efficient working capital management. And under working capital management we split up into three distinct management: cash management, inventory management, and receivable management. Now one thing that I would like to specify here, that friends, under short-term decision making we want to ensure liquidity. Okay, two things comes into picture. One is profitability, and the another one is liquidity. Now what is this actually? Now friends, you should know this, that when you want to ensure liquidity means you have ready funds in your hand. It could be cash. That means you are not investing this money anywhere. If you are not investing this money anywhere, you have it in your hand, you can provide it as and when it is required in your day-to-day running of the business, right? So that the organization runs in an uninterrupted manner, you need to ensure there is a ready fund in the business. But don't you think that if you keep fund in the business and if it is not required, then you are actually foregoing the profitability? That means you could have invested in some instruments or banks or institutions, it could have given you some return, right? So if you keep too much money or too much fund, then you are sacrificing the profitability, or if you keep less fund, then you are sacrificing the liquidity. Are you getting my point? If you keep too much, then your profitability is hampered. If you keep too less or too little, then your liquidity is hampered. So that's why you need to maintain an optimum level of fund. In the short run, you need to maintain an optimum fund. Okay, as you know that if you want to increase the profitability, your liquidity will go down. So there should be an optimum level of fund that should be available in the short run. Right, friends? So this is about short-term finance function, or you can say the scope of finance at the short term, or you can say functions of finance at the short term. Now let's go to long term. So you know that you need money for your regular operation, but you need also money for long term purposes. Okay, you need to invest money on long term investments, right? Capital assets. Okay, so under long term we have investment decision, financial decision, and the last one is the dividend decision. So friends, these are the three important aspects of long-term finance decision. Okay, let's start. First one is the investment decision. Now what is investment decision? As you know that under investment decision, what we are doing exactly here is that we are trying to invest our, as I already told you, that the objective is to make the best possible use of the fund. Okay, now under investment decision we are trying to put your money, or you are investing, you means the organization investing the funds in such a manner that it gives the maximum returns, right? Okay, now this investment decision means we are trying to make long-term investment decisions, right? Because short-term is covered here. Long-term investment decision, as you can understand, it lasts for several years, and the benefit is also spread over different years, a large number of years, and it requires a huge amount of money, huge amount of capital. Therefore it is also known as capital budgeting decision. This is also known as capital budgeting decision. Okay friends, so that means here you are trying to put money in projects which is likely to give you returns over a few years to come, and it includes a huge amount of cash outflow. Okay, huge capital expenditure, and that's why it is known as the capital budgeting decision. Now friends, all the time I was telling you, so far I was telling you that we would make the best possible use of the fund. Now best possible use of the fund from whose context? Remember friends, the objective of financial management is to maximize the wealth of the shareholders. Maximize the wealth of shareholders. So friends, we will have another video where I will explain you what does this mean in details, but for time being you try to understand that shareholders are the ones who has given money to the business, who has pumped money in the business. So we want to see that whatever actions the business takes, whatever actions the manager initiates, it gives the best possible returns to the shareholders. So friends, here whenever you are investing the money, you have to, the decision criteria is that the maximum wealth is generated for the shareholders, because manager is taking the decision, but the decision should be done in such a manner that shareholders gets the maximum returns. So your capital budgeting decision is based on the value maximization. Whatever projects you take, okay, suppose there are 2-3 alternatives A, B, C, which one you will select will depend on which one is maximizing the value of the shareholders. So here we have a concept called net present value. Okay, we will study this in details in some other lecture. So remember, so if you want to get a gist out of it, what it is actually, that in a long term the finance manager has to ensure that the funds are invested in those projects which gives maximum wealth to the shareholders. When we say maximum wealth to the shareholders, means we will take up only those projects which gives high NPV. NPV stands for net present value. It gives a high net present value. So a project which gives the maximum net present value will only be accepted, because that is that project which gives maximum wealth to the shareholder. We will study about this later in some other lecture. This is about investment decision. As I told you, this is also known as capital budgeting decision. Let's come to financing decision. Under financing decision, you are trying to find out the sources from which you are going to raise fund. Means organization not only invests money, but it also borrows money, or it also raises funds. Okay, so you are trying to raise here, you are trying to raise fund. Okay, raise funds. So when you are trying to raise funds, remember you have got two choice. One is you can go for equity, another is for debt. What is equity? Equity means the money, suppose the firm requires 15 crores of rupees, INR, Indian rupees. Now the manager has to decide that if I have to raise funds, should I take from equity shareholders? Should I issue shares and equity shareholders will give me money? Or should I go for some borrowed funds? We can say debt fund from banks or some institutional borrowings. Now friends, whatever we do, we should keep in mind that the shareholders' wealth is maximized. So we will try to find out an optimum mixture, optimum capital structure. This is called optimum capital structure. Optimum means the best combination of equity and debt, because friends, if you take too much equity, that is also not good. If you take too much borrowed fund, that is also not good. Okay, because why? We will understand it later again, because we have another concept called financial leverage, where you will understand that if you take more of the borrowed fund, there is more risk involved. If you take more of equity fund, then there is less returns to the shareholders. Okay, so that you don't have to understand now. So you have to ensure that there is optimum capital structure. Optimum capital structure is that capital structure which has a balanced combination of equity and debt, which gives the maximum returns to the shareholder. So this is our buzzword, that whatever we do, it should be guided by this criteria, right? Coming to the next one, that is the dividend decision. Now coming to dividend decision, here we are trying to see that the money that is been invested is been used. See, we have raised funds, these funds are invested, and out of these investments we have generated some returns. Organization has earned some profits. Now you know, a part of the profit has to be distributed as dividend, and part of the profit is retained in the organization. Suppose 100 is my earnings. Out of this 100, I partially retain in the business, I don't distribute, and partially is distributed as dividend. Now the question is, how much should be given as dividend, how much should be retained in the business? See, if you retain in the business, that has a prospect, because it will be used for the expansion purposes. Whereas if you distribute in the dividend, that also has an impact on market price of the shares will go high. Now sometimes what happens, some companies have 100%, I mean there can be some situation where there can be 50% retention, 50% distribution, or it could be 80% retention, 20% distribution, or 80% distribution, 20% retention. But I don't know which one is Perfect. So as a finance manager, you have to decide the optimum dividend policy. Optimum dividend policy. This optimum dividend policy is the one which maximizes the wealth of the shareholders. So friends, ultimately what we are doing is we are trying to maximize the wealth of the shareholders. Whatever decisions we are taking, ultimately our objective is that we maximize the wealth of the shareholders. So friends, this is all about today's lecture. We have seen that what is financial management all about and what are the different functions of financial management, or you can say scope of financial management. Short term, which is all about working capital management. Long term, we have investment decision known as capital budgeting decision, financial decision and dividend decision. We will have separate elaborated videos covering each of these decisions. So friends, now you know where we are starting from. We will meet in many such videos. Thank you for watching. See you again. Bye bye.